Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. So today we have prepared a bit special report where we have considered situation in Japan. We are interested not actually in the performance of the Japanese yen, but mostly in the policy that the Bank of Japan follows right now. Particularly speaking, interesting rate policy because it makes direct impact on the performance of the United States bonds. And as you understand, performance of the bonds, which means yields, stands in a tight relation with the gold performance. Correspondingly, depending on what Bank of Japan really could do with their difficult situation that they stand right now, makes direct impact on the potential performance of the gold market. And things that we actually see right now in the Japanese economy and actually what's going on, promising nothing good to the performance of United States bonds. We even do not exclude the chance that Japan could become the active member of some big geopolitical confrontation in the Asia-Pacific region, because they have really bad combination of the economical data. So when you read it, you will understand what I'm talking about. Speaking about the performance of the gold market directly, here actually we do not have something new with the background, fundamental background. Actually, it mostly remains the same. We talked about the same indicators for a few months already, and we every time mentioned that no signs of the improvement. This is the structural crisis in the United States that's moving slowly but stubbornly, without any acceleration or slowdown, without any big volatility, which is more typical for recession. Here we do not have the recession. We have gradual degradation of the production sector and disbalance between the consumption and supply and real power of the domestic economy. Until these two parts will come in some equilibrium, this process will continue. Currently, it's just some signs of this process are coming on surface and becoming more evident, and that's why market starts showing reaction. In fact, things that Jerome Powell said recently, everybody knew before he has said this. Is it nobody know about problems of the budget deficit or big debt? Absolutely not. But the official acknowledgement from the official person, which is Jerome Powell actually is, that makes the difference. So that leads to some impact. No need to speak about the geopolitical situation. Recent payrolls also add some fuel in this performance. All in all, you can see that it's make the direct impact on the gold. And we do not exclude that this might be actually the major reversal performance action that actually could put the foundation for new upward swing with the major upward trend on the long-term chart. The reason for that mostly stands on the weekly chart because, first of all, market now has challenged the top of the June. It's moving about it. Second, if you remember, we have the double repo pattern, and formally with the Friday's close, we have the double repo failure because market has closed $4 above the 618 resistance, as I will show you later on the 4-time frame chart of this downward action, which means that double repo has failed. Yes, we need to wait for some time to see what the market will be doing around this level because, as you understand, $4 for a weekly time frame, it's very small. So we need to get some more confirmation. But the fact is that formally this has happened. And the failure of the weekly pattern, and actually it's not only the failure, as you know, the double repo failure is a new directional bullish pattern. it suggests minimum action above the stop. So that makes us think in turn that this might be the major reversal and upward continuation on the major trend. Besides, even for a short-term perspective, you could see what has happened. Market has formed bullish reversal swing. Actually has exceeded not only the previous swing down, but also it has exceeded this nasty black candle that has happened, this sell-off in May. So this is very important, which makes the drastic changing in the sentiment of the market. Breakout of the triangle, of course. So this is just confirms the really bullish sentiment that market has. On the 4-time frame chart, you could see that market actually already has completed our head and shoulders pattern target. So we thought that it maybe will last a bit longer, but payrolls has made their actually work, and market has completed XOP. Now it stands at some kind of agreement. So we could see 2387 fib level and target 2392, which is agreement resistance. Taken together with the daily overbought area, 2405, market right now not at overbought, but still it stands very close. There's chances that we could get some bounce after a very active previous week. So maybe some silence will be at the eve of the release of the inflation data. And if you do not have the long positions based on these hand shoulders, or you already have closed them, or whatever, you just think about taking a long position with the gold, we could just keep an eye on the possible pullback, some retracement, to consider taking the long position. The two most probable levels where might be interesting stands right there. So 2365, which is nearest support, and confluence around 2350 approximately. So that's the levels probably we should start watching in the beginning and see what will happen around it, making a decision on possible long entry in continuation. If you still hold the position with these hand shoulders, well, you could decide what to do. Maybe you will decide to hold it and for the upward direction. Just don't forget to move stops. On Friday, indeed, we've got this pullback that we talked about, the 30% retracement, once market has completed the OP target. So we'll take a look on the 4-time frame chart. This is OP has been completed. And we said, keep watching. Maybe after the OP, it might be the pullback. But as you can see, it was really very fast, just for a few minutes. And it was mostly impossible to catch this entry right in place. So I suggest that nobody was able to just buy here. That's why we consider other chances that might be formed in the next week. So let's keep watching. Our situation currently on all markets, the gold market in particular, become very interesting as all events are accelerating, as economical, as political. This makes direct impact on the markets where we have really big activity right now. I already has shown this chart in yesterday's euro currency video. Also will show you again, this is 10-year bond. So with this recent collapse, I not exclude that we could get some free drive with the target around 4.10, which also might be supportive for the gold, this drop in the yields. So let's keep watching, and hopefully we will get good entry opportunities on the next week as well.